Broadcasting from Millvale Studios, you are listening to Funny Money on the River's Edge Network. I'm your host, Tom Henry, and as always, your other host, Matt Wolfarth, and Brian Crawford, our producer.
And he looks well rested today.
Woo. Right.
He did. I don't know, schedule change or new job, what?
Well,
didn't you just ask him if he stayed up all night?
No, yeah.
He did the last time.
I can't hear myself. Hello. Can you hear me? No.
All right, well.
I heard you a second ago. Yeah, he can't talk. Right, we can say whatever we want.
He looks great,
he
but he can't speak.
No! Here we go. Okay. No, I had some days to sleep. Now we have James, so he can do some of the work for us.
Yes, James.
And, James, we're calling him Jesus last
James is our new intern here.
Starting next week, I'm going to be going to live Monday, Wednesday, Friday, 10 to 11 a.m., so I will not be going without sleep on Sundays. So.
Okay. All right. Solid.
Live.
Not going without sleep on Sundays is a good thing.
Yes.
All right.
Sleep. You're always better with sleep.
Hey, so let's get into the topic, at hand, which is the home supplies market, in particular in the United States is what we're looking at. And there's two dominant players.
And it's not Gabriel Brothers.
No. Is that a home supply store? Not Busy Beaver.
Big Lots can be a little bit.
Busy Beaver?
Yeah, Busy Beaver was
right.
big.
And we can't really talk about 84 Lumber, even though that's a big player, because they're private and you can't buy the shares. So what we're going to talk about are the two biggest in the United States, and those are Home Depot, number 1, and Lowe's, number 2. And
people have preferences on those, right? I mean, you're either a Home Depot guy or Lowe's person. Well, I don't want to say guy, I want to say family.
To me, my preference is just whatever's closest to my house.
I think they're both equal.
Which happens to be a Home Depot.
I have both within shouting distance of where I used to live.
Yeah.
Now I don't have to do anything because I rent.
Right.
But I really kind of miss going to those stores, though.
Yeah, you sort of, they have a sentimental appeal to you.
I'm not very good at fixing things, but
okay, but there's something like you like the smell of it.
Well, I felt like Americana. I felt like I was
right. Yeah, you go with your big boots.
Yeah,
that you just gave away.
Here, let me just tell you this though. I think if I was a divorce attorney, I would hang out at Home Depot and just give out cards. Here's a couple trying to pick paint together. Here's my card.
Yeah.
Here's a couple.
I agree with that.
Trying to add on to the solarium.
I've been one of those. Members.
You could literally make a living there. God, I'm sorry.
Okay, let me talk about Lowe's. Okay, and this is interesting. All right, let's talk about the founding of Lowe's and the history behind it. All right, Lucius Smith Lowe, Lowe.
Are you making these names up because these stories get
better? No, I love it.
Is that a porn name?
Lucius is
He used
great.
to be a porn star.
That's
on
like,
the main stage, Lucius P. Lowe.
Right. Well. It's Lucius Smith Lowe, not Lucius P. Lowe.
Okay.
All right. Now, this is really funny, though. And
I bet he's from the South.
Okay. I got this directly from Wikipedia because there was no other source, right? So it says Lucius Smith Lowe, who had a Baptist background, opened a hardware store in North Wilkesboro, North Carolina in 1921. All that they say about him at all in his life is that he's a guy who had a Baptist background.
Really?
And I know it's funny because I Googled Lucius Smith Lowe and nothing came up. There's like nothing except for
you stumped Google.
Yeah, there's the Lowe's Wikipedia entry, but there's no Wikipedia for Lucius Smith Lowe. And so all I know about him is this thing. He had a Baptist background, which is like, why would you even include that? Was he like a crazy firebrand?
Yeah.
Like, I mean, why?
Fire and brimstone.
It reminds me of like why would you unnecessarily just throw that? He must have been like Baptist must have been a big thing for him, right?
Yeah, he had to be.
I mean, for them to put that as the only detail. But I thought of it reminded me of when I went to Burgatory, and with my wife, who's currently we're working on.
You're in transition.
Being an ex, right? And she said, hey, to the waitress when she came by the table, She said, "Hey, I'm a pescatarian." You know, a pescatarian
Is
is
a fish eater.
right. It's someone who is like a vegetarian, except they include fish in their diet also. So she said to the waitress, "I'm a pescatarian," and the waitress like nodded and kept going.
She goes, "I'm Sagittarius."
Okay, all right. Then
We're not compatible.
5 minutes later, okay, the waitress comes back to the table and she goes, she says, "Is there any reason why you told me that you were Presbyterian?" Like, is there some dietary restriction or something?
we like the leavened bread. Because they do have better Presbyterians.
Hey, by the way, I'm Presbyterian, just so you know. What difference does that make? All right. Anyway, so it reminded me of that. Like,
That's
it's like
really
that just
funny,
puts it in there, the
I'm a
religion, but
pescatarian.
nothing else about him. Okay. All right, so he opened the hardware store in Wilkes-Barre, North Carolina, and then he died in 1940. So that was in 1921, and the only other thing I have about him is that he died in 1940. His son Jim got control and partnered with a guy named Carl Buchan in 1943. And Buchan changed the store so that it focused on hardware and building materials. Before that, it had they had to get rid of their dry goods, their horse tack, their snuff, their produce.
Snuff! In North Carolina, they got rid of snuff. That doesn't even sound
All right, so this is 1943, right? I thought these items are funny.
That's snuff.
All right, horse tack. Do you know what horse tack is?
Yeah, that's what you feed horses.
No, it's not.
It's that.
All right, what would that be? What would you feed horses?
Hay.
What you think horse tack is hay?
No, why didn't
No.
Horse tack
Alright.
is something that
No,
you
horse
put on a
tack
horse.
is like exactly. Anything
Well,
that
that's
you put on a horse.
Oh, okay. I thought it was maybe talcum
It's like
powder.
all the
You're a little clammy. Let me
a
give you some
saddle.
powder.
A saddle is horse tack. A bridle is horse tack.
Why don't we just say saddle and bridle?
Well, because it's an all-encompassing term, so I don't need to say each of those
Doesn't
things.
even make sense.
But it's just a very outmoded term that I
I
haven't
should have
heard
known
of.
that because I was at.
All right. So okay.
Another
So
store.
now this is the best. All right. So they got rid of their dry goods, horse tack, snuff, produce, and notions.
Notions?
Notions. And it
That's
just
like
says-
a lotion?
Do you know what a notion is?
A lotion? It's like a lotion that's an empty bottle?
I have a
It's a
notion that
notion.
you don't know what a notion
I
is.
don't have a notion. I don't know what a notion
All right. Other than the notion in the term in the way I just used it, notion is it's a little knit thing.
Did you know this before you did research?
No.
Okay,
No,
good.
I
Because you're
didn't.
acting like you did.
I'm trying to lord over you just because of the research.
He's coming out like
Well, no, I
dropping some knowledge on me. Go ahead, tell me.
well, I am because I just read about it.
So it's a little knit
All right.
thing. Go ahead.
Yeah, so it's a little knit thing, like a pincushion is a notion. A little tiny little pillow is a notion.
Aren't they knickknacks?
It's like they're like little knickknacks.
So it's a notion knickknack.
I guess.
It's a southern word for knickknack.
Back in those days.
Is it a pin cushion? My mother
Yeah,
used to
okay.
love pin cushions.
You're right. So it's 1943 and the South. That was a good thing to point out because the vocabulary can be a little different just from north to south.
Correct.
But, so yeah, we're not familiar with that term up here in Pittsburgh. Maybe they are down there, or maybe it's
I
just
could
because
see
it was
it, yeah.
1943 and it's
give me
not.
that little notion. I can see that being said with a glass of sweet tea.
Okay. All right, so they got.
You didn't like that response? I just like. I thought it was brilliant. But go
So
ahead.
the store, they ran a very good store, and after concentrating on the hardware and building materials, sales picked up, and I think it is because then they weren't like competing with the general store; they had an identity as we are a home supply store, for
Correct. Like for when projects.
right. And so then they got a second location also in North Carolina in 1949. Okay, all right. But then they got into a big argument about where to expand.
Mm-hmm.
And in 1952, they decided they had enough of each other. So they were like, Splitsville, all right? So the two decided, they had a couple other businesses that they were joint ventures in also.
This is Jim Lowe and Carl Buchanan,
Correct.
correct?
Yeah.
They had a lover's quarrel.
Jimmy and Carl. All right, so they split the business, and Jimmy Lowe took control of the joint ventures that the two owned outside of the hardware store, including a car dealership, and then in 1954, this is 2 years later, Jimmy Lowe founded the Lowe's Food grocery store chain, which is a very successful chain in the South.
Oh wow! I didn't,
Yeah.
yeah, I've seen those. I
All
didn't
right,
know they were
but so he spun off and did something completely else that was successful. So Carl took control of
Lowe's
the store, right?
store.
And that's interesting. Yeah. So Lowe
Is out.
actually, and the family is out, right?
Why didn't he just change it to Buchanan at that point?
It's Buchanan.
Buchanan.
Because
That's
probably because it doesn't sound as that good.
Buchanan. Buchanan. Buchanan.
I
That
don't
would
know.
have a good jingle.
I don't know. Maybe they had already, they had the two stores and they had a good name and they didn't want
They're already
to change
established
it.
at that point.
Right.
Yeah.
Okay, so Carl, now he took control of the hardware and building supplies business. And he quickly expanded Lowe's by opening several more North Carolina locations. All right. But, okay, so this is from, the mid-50s to 1960, because Carl died in 1960 of a heart attack at age 44.
Oh my God.
He was a fat dude.
Was it?
Yeah.
Did you see a picture of Carl?
Yeah, I did. Yeah.
I'm Carl Buchanan.
All right.
Hold a Tommy Boy on it.
So
I don't want to joke about that because I never
I know.
know.
It's serious, man. I know.
That's why I
but
eliminate stress. I'm like, you get stressful. I'm like, I'm going to take a nap.
you eliminate stress.
Really? I don't. No,
That's
actually, I stress myself out.
Oh my God, you're stressed all the time.
Am I really?
All right.
Okay. So, I always thought it was
You always,
I
you
always
always have
it.
some reason to be stressed.
Yeah, yeah.
All right.
My
So
God, Marty, something's going on. Go ahead.
management then was left all by themselves. He had guided the business, Carl,
Did Jim come back?
and
What happens? What happens?
They didn't know what to do without Fat Carl, as he was known.
Fat Carl? That's what they called him?
Yeah.
Oh my God. No wonder he had a heart attack. He's pissed off. Fat
All right.
Carl.
Well, back then it
Does he
wasn't
know
such-
he's Fat Carl? Hey,
Yeah,
new guy,
that
call
was
him Fat
before it
Carl. He
was
loves that.
Okay, that was back in the day where PC wasn't that much of an issue. People just said what was on their mind.
Give me that chili dog,
And-
newbie.
And they were super racist too. All right. So okay, back in okay. So he died in 1960, and then they didn't know what to do, so they figured, well, let's take it public. So they took it public in 1961.
How did they know how to do that without Fat Carl?
Well, no, you go get a lawyer and an investment banker, and
Okay.
they'll do it for you.
Okay.
All right, but the thing is that being public, then the board decides about the management and everything.
Okay.
All right, so it gives you like an overseer automatically, and that is the board.
That would have
Right.
been a pragmatic move. Do you think it was pragmatic at that time?
I think it was in retrospect.
Kind of worked out.
It seems like it worked out really well. So, in fact, today, Lowe's is the second largest home improvement store chain in North America. And it is headquartered in Mooresville, North Carolina.
Well, we're missing some big chapters here. So, like, they went public, and that's all you're going
No, well, they went public. There were some big chapters in there. They had a CEO, Robert Nardelli, who came in 2000.
Did they call him Italian?
Oh,
Nardelli?
no. All right. Hey,
I'm
wait.
kidding. I'm
No,
sorry.
no. You.
No, that was
Okay, we're
funny.
not.
That's
That
a
is
little
funny.
bit of humor, Tom.
All right, no, but I'm just trying to correct myself.
Okay.
Okay, because that is incorrect.
Okay.
I was thinking about Home Depot.
Okay. That would be
No.
a faux pas.
That would be a
You're
faux
wearing the wrong vest, pal.
All right. So
You need to go blue, not orange.
no, there isn't that much more to the story because they expanded organically. I mean,
They
they
just
were
kinda-
just a very successful.
They found the right niche and just said,
Right.
people are going
And-
to fix stuff.
And they had good management, and it was well run, and it spread and grew large. Okay, so let's talk about, the financials today.
You're like
Right.
jumping right into it.
All right, so, well, first of all, Lowe's just came out with earnings and they beat expectations and they raised their guidance. And you know what that reflects is probably a pretty good housing market, which is what we have right now. It's pretty good.
Yep.
It's been good in 2016. It's not gangbusters or anything though.
But there was,
But home sales aren't everything. But they correlate a lot because people buying new homes tend to buy a lot of home improvement products so they can fix.
yeah, even if they buy a new home that's like move-in condition, like I want everything changed
Yeah,
because they watched HGTV. Like,
I know, right?
honey,
Yeah.
I know we're having dinner, but I thought we'd turn the guest room into a solarium
Oh, right.
in a half hour.
Instead of a yard, we're gonna have hot rocks.
Hot rocks, yeah, and we'll do hot yoga on our hot rocks, and then I'll help you with them
Right.
about the head and neck.
Good luck selling that one. All right, so the PE is 29.
29.
The dividend is 1.42%. All right, it's not nothing, but not much. The return on invested capital, 12.68%. Net debt to equity, 156%.
Is that high?
Carrying a lot of debt. Yep.
Okay.
It's more than double what I would want.
Okay.
All right. Now here's the thing.
Here's the
So
deal.
far, that sounds pretty negative because the PE is well above the ROIC, and the net debt to equity of 156%. I like to see something normally with a company like this that has
1-to-1.
well, no, that I'm saying that it has earnings. Actually, below 1-to-1. It has earnings that are variable. Not that was the wrong term to use. Has cyclical earnings, which means that the earnings tend to increase during boom times and decrease sharply during.
Is that the
downturn.
beta? Is that number the beta? Like it would have a high beta.
They're not completely unrelated.
Okay.
Okay, but it's not.
Not what
that.
you were speaking of. Okay.
Right. Okay, so the earnings per share, or the earnings, are expected to increase 47% this year.
Wow.
So that's huge.
No, I saw something. I just went to Builders Exchange today, and I picked up a magazine, and they foresee that this is going to be a 3-year.
Boom time for real estate?
Correct.
Yeah, well, that's
Because
good.
they said that the wealth, I don't know what number they were quoting, but it's $87 billion or something that consumers have. And it was 20 and 19.
Disposable capital, disposable income.
Yep, in
Okay.
the American households.
Well, I do believe that the savings rates have gone up since the last couple of years,
And the Fed's going to increase.
And they're, well, the Fed is likely to raise rates at some point, but at the June meeting, still the market discounts that to only a 19% chance.
Okay.
Okay, so probably not at the June meeting, but possibly.
All right, so go back to this 47% number. What does that mean?
Okay, it means that earnings, earnings are going to increase by 47% in 2016 over what they were in 2015.
Okay.
And okay, so the PE is based on the trailing earnings. All right, so
The forward.
because there's that much of an increase in earnings, what I want to look at, right, is the forward PE.
See, I'm learning.
Exactly to see then if it's a buy.
Okay, so
Okay,
what's your summation?
so what I do then is then I plug in the expected earnings for 2016, and the forward PE is 19.22. Okay, so we'll say that's 19 as compared to 29, right?
Yeah, that comes in the ballpark.
Okay, and the ROIC is about almost 13. So we're not too far off there. All right, but here's my problem. The other numbers don't give me any reason to buy it. If I just look at the 19 and the
That's
ROIC of 12.68, then I see the net debt to equity of 156%. I like a debt to equity of between of less than 70%. Right, so we're more than double
On a cyclical
the
business.
threshold
right?
there. So I think that's too much debt for them to be carrying in order to justify this price.
Yeah, and you already factored in the earnings, the predicted earnings.
Right. So I can't.
We're gonna
say-
go ex-nay on that.
I will say though that the growth is really impressive. Same store sales were up 7.5% year over year in the first quarter. That is extremely impressive. So I applaud the management. It's just that the stock is priced too high. Okay.
Good call. I like that.
Hey, now
That's
we're gonna
another interesting story.
we're gonna take a brief break for some promos, and then we're
And
gonna
a
come
breather.
right back, and we're gonna talk about Home Depot.
Home Depot.
All right.
Hey, this is Matt Geica, the host of your alternative sports talk program on the River's Edge. It's called Geics Got Game, and it's every Friday at 7 a.m. I'll give you a peek behind the sports media curtain, zoom out for the big picture, and always obsess over the details of the games, teams, and players we love or love to hate. That's Geics Got Game, every Friday at 7 on the River's Edge.
Okay, here we are back again, and
We had a makeup break there. Way
yeah.
to go. Way to go.
I'm going to talk about Home Depot now. All right, but I want to tell you about both these stocks in that they have both risen a lot since 2014.
I know that personally.
Yeah.
Because I had Home Depot in 2012, and I'm like, it's going nowhere.
Ouch. I've never bought I don't own either of these stocks, and I've never have.
No, there was somebody that came out and said these are flat, they're in trouble, and I felt good about it. And there's a little intuition there that
Okay.
I felt, and I was right.
All right, so to go back to Lowe's for a second, the price in 2014 at the end of the year was about $49.
Oh,
and
go
now,
back to
now it's
Lowe's
about
symbol.
$79.
The symbol is LOW, right?
LOW.
Yeah, we're not
No. Okay.
Home Depot's what?
Home Depot is HD. And okay, for them, they were at $81 in 2014 and are now at $132. So that's
That kinda sucks.
really nice. All right,
I'm kidding. I'm being facetious.
sucks for you, but not for anyone who
I
was
had it
owning
at
it.
50.
All right,
I'm gonna cry.
let me tell you
There's no
about.
crying on funny money, is there?
Sure, there is.
First time.
I definitely want to
It
cry.
better be.
That and Starbucks. I had both of them. Both of them.
It better be entertaining or educational, though.
No, there's no.
All right.
I'm not gonna cry. I'll take it like a man.
So let's
I'm
continue.
gonna drink
here.
instead.
In 1978, okay, Bernie Marcus and Art Blank.
Art Blank.
It
What,
sounds like
a
I just
voiceover
fake
guy from.
No,
the
you're talking
cartoon?
about Mel Blanc.
Hey, what's up, Doc? Let's get
Mel
on
Blanc was
Depot.
the voice of
Oh.
Bugs Bunny and all those
What's
guys.
up, Doc?
All right.
Start a home improvement.
Now this
store.
guy's Artie Blank. Okay, Bernie Marcus and Artie Blank. They worked at Handy Dan Improvement Centers.
Handy Dan. I like
All right.
Handy Dan. Come
Now-
on, that's great.
It's serious. Okay, that was
Oh, that's okay.
It was an LA-based chain of home improvement stores. All right. Now they had a corporate power struggle at Handy Dan,
Of course.
and during the corporate power struggle, Bernie and Art found themselves out of a job. They got canned, and
Know that feeling too.
so what they did is they approached investment banker Ken Langone, who they had been familiar with. Because he had a large stake in Handy Dan at one point, but then he sold it actually just prior to them getting fired, on their advice,
Okay.
which might have had something to do with them getting fired too.
A little insider trading.
No, not insider trading. No, they're telling him to sell the stock. That's not insider trading.
Okay.
Well, okay, yeah, it is. If they, sorry.
All right, I'm really confused.
All right, no, I'm sorry. They're telling they. This is why they said
This was before they were
You
public.
have to hear
though.
the reason why they said. Okay, the reason why they said to sell the stock was because they thought that Ken could get along better with the CEO, or not the CEO, the chairman of the board, if he sold his stock, than if he were a big
A
shareholder.
stock. Okay.
Okay, I don't know why, but that's what they said, and that's not
That doesn't
insider
mean that.
trading. That's just like a
That's an
friend.
observation.
They were friends. It's like a friend recommendation, and I don't think that there's any basis in truth to that, based on subsequent events.
They just wanted to get that money freed up so they
Oh,
can
maybe.
go invest
Come
in
on.
their little shindig.
Hey, it worked out for them.
Okay.
All right, so
These stories are the best part of our show, I gotta be honest.
Yeah, I enjoy those.
so Ken Langone, had recently sold the stock, and he was an interesting character. All right, he
Yes,
was born
good
in Roslyn Heights, and to a plumber and cafeteria worker, and he was like very blue collar background, worked his butt off, and had all these different jobs, including ditch digger. I didn't know that was like a literal
Ditch
job.
digger.
I just thought that was from Caddyshack or something.
Great alliteration there.
Yeah.
I'm a ditch digger.
But
You'll get chicks at Millville
ditch
with
digger
that
was
line.
one of his
I
jobs.
think I'm a ditch digger tonight if I'm at the bar.
And so
What do you do? I'm a ditch digger.
he's working his butt off and paying to go to Bucknell. which is a
Bucknell!
great school, and
How much was it back then?
he
Like
graduated
$8?
early because he did it so fast, even though he's working full time the whole time.
Oh my god.
And then he went to NYU Business School, which is excellent, Stern, and he did that at nights, and he had a full time job during the day.
Oh my goodness.
So the guy is very intense.
Very driven.
Yeah, and also very bright.
Now who's this R.D. Blank?
No, this is Ken Langone.
Oh, that's Ken Lane.
All right, so he got the money for Bernie and Art to open the first 2 Home Depots, and they did that in downtown Atlanta. All right, they were a success, and right away I think they had an idea for the store because these guys had been executives at Handy Dan, so they were very familiar
Yeah, they knew what they
with
wanted.
how to market and everything. Right.
They probably knew what worked, what didn't work.
Well, right, but at Handy Dan you had other executives who were kind of holding their hands.
Usurping your
Right,
authority.
now they had the freedom to make the
execute.
changes they wanted.
Yes.
And the changes were successful. So
What happened to Handy Dan?
after the first 2 Home Depots in Atlanta, they opened 2 more, also in Atlanta. And then they had an IPO, initial public offering, in 1981.
With just 4 stores. You did an
Yeah.
IPO. Wow.
You could definitely do it. You can do it with 0 stores, just a concept.
But let's do that. It's called funny money. We're going public. Let's go public.
So they got a New York Stock Exchange listing in 1984. So that indicates that between their IPO and 1984, they were very successful.
Correct.
Opening stores and expanding, and now they are the
So
largest.
that's a panache, like to get on New York Stock Exchange as opposed to NASDAQ, or
No, NASDAQ is also an excellent exchange.
but it's just tech-driven stocks.
Well, it's tech heavy, yes, certainly. Yeah, NASDAQ, I think it was a proxy for tech in general. But New York Stock Exchange, it is quite a feat to get listed in the New York Stock Exchange. There are lots of little over-the-counter exchanges that have
That
small
they could have started there. and then-
businesses that are public, but you don't. I generally.
But
stay
people
away
kind of
from
bought the
things like
concept
that.
from the get-go, right? So like,
Right, the store was going well, all 4, and then they were able to quickly expand once they got that infusion of cash from the IPO. Okay, so now, after getting a lot of cash from selling equity, they expanded very quickly and very successfully, and they are now the largest home improvement store in North America.
now let me ask you this: are there still a lot of places they can still go, or are they pretty saturated?
Oh, of course, there's other countries they can go to, but
In Mexico,
it would be a little.
Casa Depot.
You have to have relationships with the suppliers and stuff. Of course, no, they could expand. They're not, but I don't know what the competition is like in.
Well, I
other
mean,
places.
in the United States, I mean, they're saturated though. And what about Canada?
Well, you never know. I don't know. I still have to drive 10 minutes to get to Home Depot. It's not like right around.
They're not
my
like Starbucks.
corner. Yeah, they're not like that. I don't know enough about the market to answer that question appropriately.
That's a great answer.
All right, but
Thanks for your non-committance. Is that a word?
all right, here, look. So they have a market cap, which means the market values them at $165 billion. And that's more than twice Lowe's. Lowe's is at $68 billion. So you can see Home Depot is by far
Killing it.
the dominant, and Lowe's is number 2, but they are the dominant home improvement store in North America. Now the PE is 23. The dividend is 2.09%.
A little better.
Yep. Return on invested capital, 26.25%. So you can see it's a well-managed company and that the ROIC percent is above the PE.
Which piques Tom's interest.
So far, these 3 statistics have me very interested, right?
Yes.
Up to this point, I would say this is a buy.
Until you get the...
So I get the next one. Yeah. Net debt to equity. 302%. Come on. These guys have been borrowing up the wazoo.
We're going to ludicrous spending.
Yeah. So that's too much debt for me. I mean, that's a big negative. So in order to justify that big a negative, I'd need to see a bigger,
A crazy growth
an
number.
even in more intense ROIC. Yeah, or a crazy growth number. Now, the earnings are
That's a
expected.
term I coined myself, crazy growth number.
I like it. It's
I
perfect.
need a crazy growth number.
You should sell that to CNBC. So, all right, the earnings are expected to increase 14.8% this year.
That's still good.
It's good,
But
definitely
it's not
solid,
47%.
but it's not enough to justify 302% debt to equity. That just in case you don't know, what that means is that if you took the debt and isolate it, the net debt, and that's the debt minus the cash that they have.
Okay.
Okay, so all the debt that they owe minus the cash that they have divided by the equity. And the equity is like the value of the company accounting wise. Okay,
Like,
so
is that even the buildings, the land, everything?
yes,
Oh my God.
it's the assets minus the liabilities. So what you have left over is the equity in the company, right?
Yeah.
How much the company is worth on an accounting basis.
Yes.
All right, so when the debt is worth 3 times how much the company is worth on an accounting basis, I think that's a very...
It's got me all choked up.
It's a risky proposition. See, the problem is, it's not like this company can be great to invest in. The ROIC is very nice.
They're not looking at their expense reports. or
Wait.
something.
It's great to invest in until things go south, until there's a recession.
Yeah.
And then if you're saddled with that much debt,
You're not going
you
to
might have a really hard time
service it.
being able to pay it. So that's the problem with buying a company that has great growth, seems to be well managed, but has a ton of debt. It's just what happens
Are they not being fiscally responsible, Tom?
when the economy turns.
That should be a
Yeah, I
soap
would-
opera.
I
As
would
the
say-
economy turns.
I would say not. I would say not entirely.
That's a crazy number, yeah. 3.
They're being too aggressive. I think that's a better way to put it.
Push them back, way
They
back.
might be right, they might prove it right. But obviously, okay, I told about the genesis of the company in Atlanta.
Correct.
They're headquartered in Atlanta. And I have to say, I think that this company is too expensive too.
Bummer. I thought you were going to jump on board with this.
So neither one, even though they had great earnings and the prospects for the year look really good, they raised their guidance. And one has a great ROIC. It's just too debt laden.
Hey, can you talk briefly about Lumber Liquidators and what their debacle is with
Wow.
that fake drywall and their shenanigans?
They're in real trouble. And, I think that some of this is about the risk of importing from China.
Yeah, they got
In that not knowing your suppliers very well. Because I don't think they knew that the Chinese supplier was using ingredients that could be toxic, right?
correct. They're all over Florida, right? I mean, I don't know if it's from them, but it's from China. That Chinese
Yeah.
drywall's crazy bad.
So, I know that Lumber Liquidators is very close to liquidating themselves. Right?
Do you have a short on that or no?
No.
Okay. What else we gonna talk? Well,
Okay,
we're take a break.
I don't know what you're thinking,
Uh-huh.
but my thought is that now is the time to conclude the episode.
I'm 100% good. I'm in a hockey mode. We'll see you next week on Funny Money.
We're all out of funny money tonight. This morning, I mean.
Tonight morning. This morning.